Good afternoon, everybody. Yeah, and we certainly had enough hype when it comes to Bitcoin. When you checked into the conference, you probably saw Bloomberg, and Bloomberg says Bitcoin dreams, and I think this is a very appropriate way to summarize the Bitcoin story, because a dream can be something extremely pleasant, but a dream can also be something quite scary. And for some people, Bitcoin is a very pleasant story, and for others, it's a quite scary story. And we are the first of two Bitcoin-related panels. The second one is tomorrow. It will deal more with the macroeconomic view, and the three of us will focus on the next 20 minutes on separating the hype from the business opportunity. And with me on stage, we have Barry. Barry is one of the founders, or the founder actually, of Second Market, and now he created the first Bitcoin investment opportunity in the US, the Bitcoin Investment Trust. And we also have Jeremy with me, and Jeremy is the former Macromedia CTO. He's a former CEO and now chairman of Bright Cove, and he founded and is the CEO of Circle, and he'll talk more about this a little bit later. To get us started, gentlemen, I think let's briefly describe for also our non-technical audience what Bitcoin is all about and primarily how it works.
Jeremy, before you jump in, I always ask audiences the same question when I talk about Bitcoin. So a little audience participation, so everybody pay attention. Okay, so on the spectrum of Bitcoin skeptics to believers, by a show of hands, who would associate yourself with the skeptic side of the spectrum? Put your hands up. Who are Bitcoin? So, wow, a lot of skeptics. Okay, and then who would associate yourself on the believer side of the Bitcoin spectrum? Okay, and who has no idea what I'm talking about? Okay.
All right, there are quite a few. So Jeremy, it's all yours to help them out.
Thanks. I was asked to just maybe start for people just with a very kind of 101 description of what Bitcoin is and how it works. I'm not going to spend more than a minute or so on that. Basically, you can think about Bitcoin as it's an open source piece of technology, and specifically, at the foundation of it is a public ledger, or a public general ledger, that is shared and replicated over a peer-to-peer network. That ledger and essentially the references to accounts or addresses in that ledger is verifiable by everyone who relies on that ledger. On top of that ledger, utilizing public key cryptography, is a system of essentially the creation of addresses that are stored in the ledger. And a user can use a private key to assign a change from units in one address to another address, and do that in a highly secure manner. The units themselves, which are often referred to as bitcoins, are really just an arbitrary set of digital units. There are only ever going to be 2.1 quadrillion of those units. Right now, there's about 1.2 quadrillion units of Bitcoin that are referenceable in that ledger. And it really has value entirely on the basis of those that either believe it will continue to grow in value as a system of exchange, or from transactions that are flowing through it that are pegged to or tied to an exchange value in other currencies. But at the end of the day, it's a public ledger that's open source, cryptographically verifiable, that allows people to prove ownership of units on that ledger very easily.
Barry, you are a big investor into Bitcoin companies yourself, and you also created a Bitcoin investment trust, which is a vehicle that's open to anybody to invest into Bitcoins. So maybe you can answer the question, why should we all invest into Bitcoins? And to support a little bit what you're saying, we put up the chart. This is basically, I think, last night, we're at 9:45, and today we're at 9:54 or something. So isn't that a big hype? Isn't that something that might go up and down all the time, and it's completely then random when we enter and when we leave the currency?
So what I would say is, and I'm happy Jeremy led with Bitcoin as a technology, not Bitcoin as a currency, but Bitcoin really are those two things. And there is very little debate that Bitcoin, the protocol, Bitcoin, the technology, has the potential to dramatically transform and disrupt the banking system, payments, remittance, multi-billion and probably even trillion-dollar businesses that Bitcoin itself can disrupt. And I think you're seeing a lot of venture capital money, angel investors like myself, investing in the space because we see the potential to create a new financial system for ours and our children's generation. Now, on top of that, you have this concept of this Bitcoin currency. The reason why people are excited about it, and the reason why I think we've had the success with the Bitcoin Investment Trust, is that it has a lot of the attributes of gold. So there's a finite supply. It can't be counterfeit. It's easy to kind of to cut into pieces. And ultimately, as a store of value, gold is worth $7 trillion. Gold has underperformed quite significantly over the past 12 months. And so what we've seen is a lot of around the world, people are excited about the idea of this currency that's not controlled by a government, not created by a government, that has all the attributes of gold, but the best part is it actually has utility. You can actually use it. You can't go into Starbucks and buy a cup of coffee with a gold coin, but you can absolutely, in a growing number of situations, use your Bitcoin all around the world.
Which I think it really gets to the utility value, and that's what my company Circle is very heavily focused on, which is how to make this practical as a medium of exchange, as a tool that businesses can use to lower costs and decrease fraud risks, and users can use to both store value and also reassert financial privacy as well. And so, specifically, by relying on this distributed decentralized network and network infrastructure, which processes and confirms transactions, we're able to radically lower costs of processing electronic payments. And so the model is one where, as a business, you can accept an electronic payment, in theory, from anyone with a mobile device anywhere in the world. You know before the transaction happens that the user actually has the funds because it's documented in a public ledger. The settlement of that happens in minutes, not days, which is what's typical with the settlement of virtually any electronic payment that happens today. And there's 0% transaction fee. So it's like cash from a business perspective. And then critically, it lowers fraud risk. We've seen an explosion in financial privacy theft that has taken place all around the world, some very high-profile cases in the US recently, because the electronic payment system that we have today is fundamentally broken from a privacy and trust perspective. We trust every single counterparty that we interact with the keys to our bank account. And as we've learned, most businesses are not capable enough to withstand the attacks of sophisticated cyber criminals. And so by relying on public key cryptography, you as a user never need to transmit to your counterparties the keys to your bank account. It's a digital signature. It is verifiable against your private key and public key addresses that are associated with it. And so lower risk, lower cost, instant settlement all around the world for any user with a mobile device. It's a very significant promise. And one last comment, which is sort of how to put this in context. If 20 years ago I asked you if you thought that you would be able to freely and instantly communicate with anyone on the planet, anywhere in the world, with video at no cost, you'd sort of look at me like I was a lunatic. Or if I told you that you'd be able to search all of the world's knowledge instantly from any device or the device in the palm of your hand at no cost, you'd look at me like I was a lunatic. I think in 5 to 10 years, we will all sit around and say we're able to send and receive money and make payments instantly anywhere on the planet at no cost, and we'll take it for granted. And I think that's really the promise of something like Bitcoin.
That's a strong argument. So you would already recommend to people in the room, take some of your money, convert it to Bitcoin, and pay wherever Bitcoin is accepted. And I think this is also the promise that Circle.com is making. You want to make it easy for people to pay with Bitcoins and also for merchants to accept Bitcoins, cheaper, more safe, and so on. On the other hand, there are quite a few cases where the Bitcoin blockchain has been compromised. There is a risk of the 51% attack. So it's also not completely free of any risk, right?
Absolutely. There's a lot of risks today. Yeah. I mean, I think we've seen warnings issued from central banks, government ministries all around the world around the risks. And the risks are real today. The risks are, it's a highly volatile environment. And it's not surprising. The leading exchanges are in Slovenia, Bulgaria, and quite a few in China. They're not institutional exchanges operating in London and New York and other financial capitals. They don't present institutional trading tools with hedging and derivative positions and other things that create price stability. And so we're in a very immature market today, but that is a real risk for anyone getting involved, is that volatility. The theft is a real issue as well, which is that we're not accustomed to the idea of our bank account being something that we can download and keep on our disk. And I don't know about you, but I don't really want to keep all my money on my laptop. That's not a very exciting thing for me when I think about how easy it is to lose that or lose control of that. And there's lots of stories there. So the businesses like Circle are being set up to be kind of Bitcoin operators, and we're having to try and build mechanisms of trust and security that ensure that those private keys, which are really the money, are secure. And as the price has risen, criminals have focused their attacks on vulnerable operators and vulnerable consumers that have these private keys. So those are real risks as well.
I think about Bitcoin in this way. One, in Silicon Valley and in places around the world, Bitcoin's a religion. And you meet people who are disciples, they're evangelists running around talking about it. And you talk about kind of the network effects. Not only does the utility increase as more people use it, but there's an economic incentive because typically the price goes up. And I think Bitcoin is going to have basically 5 stages. Stage number 1 started in 2009 when Bitcoin was released. And it was really kind of used as a kind of a hobbyist hacker tool, as a technology that there was no value associated with Bitcoin. In 2011, there was some press around Silk Road, and the price went from practically nothing to $30. And that was, I think, the start of phase 2, which is kind of the early adopter, the early entrepreneur, the early investor phase. And that lasted from 2011 up until 2013. 2013 was the start of stage 3, and that's the venture capital phase. And what we've seen over the past 12 months are really some of the smartest, most successful venture capital investors investing in Bitcoin-related companies. Obviously, Jeremy's company raised $9 million from Excel and General Catalyst. Andreessen's active. Founders Fund, Union Square Ventures. So that we're in the middle of the venture capital phase. So great companies are being created, backing great entrepreneurs. Stage 4 is Wall Street. And I can tell you firsthand, there is a growing level of interest and excitement coming from Wall Street of Bitcoin as an asset class, Bitcoin as an investment. And I can tell you that if and when Wall Street moves into Bitcoin, you're going to see hundreds of millions of dollars, if not $1 billion, move into this new asset class. And then that will lead to, I think, stage 5, which is mass consumer adoption. It's going to be because of companies like Jeremy's, like Circle, that make it really easy to buy and hold and use Bitcoin, that we're going to see Bitcoin really spread throughout the entire world.
When do you actually see stabilization of the ecosystem? So we see lots of activity wherever you go. You told me there are meetups where people come together who are interested in Bitcoins for various reasons. It's often compared to the open source movement. It's a little bit different because people do not only contribute to Bitcoin and the technology because they believe in it, but also they want to make money with it, right? That's why you're also here. But when do you see the stabilization phase happen, when also the fluctuation of the Bitcoin will be a little bit less, and we can, let's say, trust the stability of the ecosystem a little bit more?
I think Barry gave a good arc. I think it's accurate. I think we're just now moving into a more institutional phase of Bitcoin. That's not just reflected in sort of the private equity participation, but I think the kinds of product services that are getting built. Believe it or not, the U.S. is actually a very welcoming environment for Bitcoin innovation right now. From a regulatory perspective, there's a very keen understanding throughout government within both, whether it be the Federal Reserve or the U.S. Treasury or other agencies, that there's a need for payment system innovation, that a global model is attractive. And I think the key is that businesses need to be established that follow the same rules that other financial institutions follow, which is keep bad actors and criminals off the platform, which is really critical, and protect consumers, protect their privacy and protect their funds. And those are critical safeguards that are getting put in place as we speak at an institutional level. As that happens, and as you see, likewise, institutionally focused exchanges launch, of which I expect to see several this year all around the world, at that point, I think, you can start to see Wall Street level participation. I think you start to see the pricing in the market evolve as well. It is worth noting, though, that as a kind of fixed monetary supply, these sort of 1.2 quadrillion units today, it's a very shallow monetary base today. It's a $10 billion monetary base. For Bitcoin to support meaningful scale trade and commerce on a business-to-consumer or business-to-business basis, that monetary base is going to need to be 10 to 100 times the size that it is today. And that is actually a store of value / asset opportunity, hence Barry's very rapidly growing investment trust.
Barry, new Bitcoins are coming from solving cryptographic riddles that get increasingly complex. In the beginning, you mentioned it, in the first phase and the second phase was relatively easy to mine Bitcoins. You could use your notebook, you could use standard hardware, but today it's increasingly complex. You need bigger investments into faster and more capable machines. And would you still call it a democratic currency? Because people cannot no longer easily participate in mining these Bitcoins because there are now investments needed to really meaningfully contribute to the mining pools that are far beyond what the average Joe can actually, let's say, fund.
So I would definitely agree that, back in the early days, it was kind of like the early days of mining. You could take like a pan to the stream and pick up gold, and similar with Bitcoin. And now it's, I think, fair to say, kind of the Newmont minings and the Barracks of the world are being funded right now to mine for Bitcoin. But that doesn't make Bitcoin any less kind of accessible. In fact, I mean, anybody who has access to a mobile phone or a connected device anywhere in the world, I mean, whether it's Africa or otherwise, can be sent Bitcoin. And so from that perspective, I mean, it really is, I think, the most accessible currency that has ever been released into the wild.
You also mentioned regulation, and we see different approaches from different countries. Certain countries embrace it and love it and look forward to kind of using it and implementing it. Other countries are way more careful. There is China, where it was a huge trend, and many people actually were betting on Bitcoins, and there's now a very critical stance on Bitcoins coming from the Chinese government. So where do you see this all kind of like going from a government's perspective?
I think at this point, most central banks and governments are trying to just be educated and likewise make sure that institutionally funded businesses have appropriate safeguards around them. I think there are places in the world, though, where it's more complicated. Countries that impose strict capital controls, for example. I think it's going to be a hostile environment for those. The ability to have, the same level of freedom that you have with open internet services in media and communications applied to the funds flow and so forth. That's difficult for those governments to get their arms wrapped around. It's going to be very difficult to contain it because at the end of the day, this is just software and software applications and web services. And I think as this gets to broader adoption, those issues for those governments are going to become much more pronounced and certainly challenging.
I mean, like Jeremy's company, so Second Market is regulated, and we're offering an investment products. We're regulated by the SEC and FINRA, and I'm probably the most active angel investor in the space. I've invested in about 20 Bitcoin companies, and so I have pretty good visibility both in the US and worldwide into kind of what's happening from a government regulatory perspective. And I got to tell you, I've never felt more comfortable about Bitcoin from a regulatory status perspective, even from a tax perspective. If you look around the world, most countries now are coming out and taking a very balanced, thoughtful approach to Bitcoin. Nobody is banning it. I mean, there's always talk about some banks saying, hey, you can't use it. But even in China, China didn't ban Bitcoin. If China were to ban Bitcoin, they would ban Bitcoin. And so what you're seeing are periods of research being done, people, government speaking with industry players. I can tell you in the US, I completely agree with Jeremy, the regulators, policymakers, and legislators are taking a very, very accommodative approach to Bitcoin. And when I go to meetings, a year ago it was, what the hell is that? Or it was, that's the drug currency. 6 months ago, the Treasury Department came out with very, very positive guidance about Bitcoin being legal. And now I go into DC and I meet with these policymakers, and they actually say to me, how can I help you be more successful? How can I help these Bitcoin businesses to get launched in the US and so that we continue to lead in innovation?
You both mentioned regulation. You're both regulated from different perspectives. Bitcoins are not only seen as democratic, they are also seen as anonymous. With more and more regulation coming, and you're forced to keep log files of every transaction, also independently from the blockchain. So is that still an anonymous currency, or is it really just another currency that just follows different rules, but it's no longer anonymous at all?
I mean, at a technical level, Bitcoin is what's called pseudonymous, meaning that it's a public record of every transaction. So, one address moving money to another address, that's all in a public record. If you listed your public address publicly, then you'd lose that, that pseudonymity that goes with it. What's happening from a regulatory perspective all around the world, and including and especially the US, is at the point at which individuals or businesses want to exchange Bitcoin to and from the existing banking system, so touching bank accounts and the like, there are very strict requirements around the know your customer provisions that are part of the Bank Secrecy Act, which is actually governing a lot of financial institutions de facto all around the world right now. And so as commercial operations come online, that identity information is the same kind of identity information that you give to your bank or give to another financial institution. There are still, of course, going to be escape valves where people find sophisticated ways to move their money in small chunks and then mix their addresses and then move it out through a country where, let's say, the regulatory regime is not as strict. And you can think about what those countries might be as they support online money laundering services on a massive scale today already, centralized services like web money. And so, there's going to be leaky valves, just as there are leaky valves in the global financial system today. The U.S. Treasury, the head of financial crimes, made a point, though, in her Senate testimony when she said, let's just put this in perspective. It's estimated that there's $2 trillion that's laundered by criminals through the financial system every year today. And so this is not a unique problem to digital currency.
Yeah, and I'm going to tell everybody a little secret, so don't tell anybody. When I'm in DC and I'm speaking with law enforcement, behind closed doors, many of them are now saying to me, we would rather see criminals use Bitcoin than cash. And that's a very powerful statement because ultimately Bitcoin, at least they have the chance of tracing Bitcoin throughout the entire network. Because if you want to get on or off this Bitcoin highway, to Jeremy's point, you are going to have to reveal your identity to the wallet. And if that becomes, I think, kind of the prevailing thought throughout the world, that Bitcoin is itself a much more traceable security than cash, I think that you're going to see a lot more governmental support around the world.
You've started the Bitcoin Investment Trust, so who are the typical investors that give you money?
So we launched the Bitcoin Investment Trust in September, and we've done zero marketing, zero sales. It's all been incoming interest, and we have about 75,000 Bitcoin under trust right now. Essentially what it is a private version of the Spider Gold GLD ETF, but it holds Bitcoin. Eventually this will find its way into the public market, but for now it's private. And we're seeing interest from really three types of investors. Tech entrepreneurs, and I think the reason why is tech entrepreneurs who they see within their own businesses the opportunity for Bitcoin itself. They get excited, and there is some headline risk still, so their companies are not yet accepting it, but they're investing in this technology. The second group are family offices. And so family offices are fairly long-term thinking investors, very diversified, and they're actually starting to take portions of their gold portfolio to put into Bitcoin, which I find very interesting. And the last group, and this is the one that I think is the most important, is Wall Street. And we have a growing number of some of the most well-known, well-respected Wall Street investors that are investing in the Bitcoin Investment Trust, and I'm sure Bitcoin directly, and they're either doing it to kind of test the waters, to play around with it, or it's a precursor to Wall Street and all the institutional money moving into the space, which is what I think is going to happen.
Just on that note, I did a luncheon just last week, which was held by an investment bank and presented to their institutional clients. It was a packed room, and it was some of the top asset managers in the world in terms of assets under management who are very interested in understanding this. Obviously, it's a curiosity to some degree, but that institutional interest is very real today.
The curiosity is certainly there, and many of my clients actually ask me, should I kind of join the bandwagon now? Should I actually accept Bitcoins? And you at Circle, you want to make it easy to accept Bitcoins. So the question is, do I really have to do that now, or can I wait another 6 to 12 months and see where it all goes, right? Because many people also say, look, Bitcoin is like the first version of an alternative currency, but there might be more, there might be better ones down the road, and we're all learning from Bitcoin, but it's highly experimental, and let's see what comes next, right?
Sure. I mean, I think within anyone's kind of asset allocation mix, there's always some component of their long-term savings that they think about putting in high-risk investments. All institutional investors think the same way as well, and so it certainly can be categorized that way. From a general consumer perspective, I'm not recommending that. I think as services come online that make it much, much easier for businesses to use this online on a day-to-day basis and make it trustworthy from a consumer perspective to convert, store, and use those assets on a transactional basis, I think that'll be a more attractive time for users to begin using it, whether they're using it purely just for convenience and lower cost, or if they're saving money in it as well.
All right, as we are running out of time, last question to both of you. You saw the chart. We are at $954 US per Bitcoin today. Where do you see the currency in a year from now?
Well, I would never make a forward prediction like that because you'll be wrong. But I do tend to think Bitcoin is still high risk and the outcome is likely binary. You're either going to lose all your money or there's going to be some fantastic return opportunity available for you. But just to put it into perspective, there's $7 trillion of gold being held right now. If Bitcoin can capture 5% of the gold market over the next 10 years, that's $350 billion. There's $10 billion of Bitcoin out there today. You can do that math, and that is 5% of just gold.
I think similarly, the use cases are, there's a $1 trillion tax on the global economy of 2.5% to 3% of every transaction that takes place. If we can move towards free transactions that are more secure, a meaningful component of that will move to a platform like this. Likewise, the global remittance market, which is consumers that live in a diaspora, work abroad, are sending approximately $500 billion per year overseas at an average of 7 to 9% fee on that. So it's a predatory product that's in the market. You can find them on street corners everywhere. Likewise, tremendous opportunity to shift value from that. I think the key kind of thing to focus on, though, is really pay attention to the adoption of this technology for payments, the adoption of this technology by mainstream retailers, online services, e-commerce providers. That's going to be the biggest forward indicator of whether this is something that is going to take hold as a platform that is really broadly used.
Excellent. Many thanks to both of you. Let's see how many people in the audience own Bitcoins in a year from now. We'll ask again. And then let's see whether 2014 is really the year of Bitcoin as expected by many. So thanks for joining us. If you're interested in more Bitcoin-related discussion, please join the other panel tomorrow. Thanks.